83.31. I want to invite my guest in. He is Oliver Slope. He is with Blue Line Futures. And Oliver, you're batting cleanup this afternoon. Tell us what you got, buddy.
Well, you're just kind of seeing a little bit of selling pressure through a wide range of markets today. And for the grain markets, I don't see any major cause for concern on this pullback. We're just kind of retracing some of the breakout points, particularly in that corn market from about a week ago, where we got out above 430, 430.33 in that May contract. We couldn't get above 440, and now just kind of settling back in. But old resistance is going to be support, 430, 433. The bulls are going to want to defend that going forward to prevent funds from maybe stepping back in on the short side. And for beans, that $12 level, I think, is going to be a big hurdle to get out above. We've also heard some talks about weather here as of late. Is it too early to talk about a weather market? I don't know. But maybe that added some premium. We know that Iowa's a little bit of a concern when it comes to drought, but they're getting some rains today. So potentially that's adding to a little bit of pressure. Longer term, we're looking towards the back half of the month, at the end of the month, where we get the quarterly stocks report, prospective plantings report, and then that's where, the real fun starts. So I expect the volatility to continue to keep ticking up into and after that report, and should present ample opportunities for participants on both sides of the market.
Because we'll still have probably close to 3 to 4 weeks after that March 28th. That's when the planting will really get hot and heavy is after that, right?
That's exactly right. That's when things really start heating up, and that's when we can potentially put a little bit of premium into these markets. But outside of that, demand has been a big dark cloud over some of these grain markets, in particular the soybean market. And seasonally, this isn't a huge time of year where we see a lot of demand for soybeans. So again, I think that $12 level in May is going to be a big hurdle to get out above unless we see something shift on the fundamental side of things here in the very near term.
Right, and it's kind of interesting to see now that we're getting more and more inflationary numbers from it. Previously, when we got those inflationary numbers, commodity prices were rising and still rising. Seeming like today we're getting a little bit of a pushback on that inflation. Is the inflation now kind of starting to be entrenched a little bit, stagflation, and now beginning to be more of a dramatic impact on the consumer than maybe what it was before?
It's certainly starting to feel that way. We've seen this morning a higher PPI number, so higher producer prices, and we're seeing slower growth. And that is a big cause for concern, especially for me. When it comes to kind of a risk-off trade, you'd think for funds that are heavily short the grain market, a risk-off trade would be short covering. We're not seeing that yet. I think there's just a lot of concerns out there about global demand for some of these things. And talking about inflation, we're seeing crude oil move out above $80 and potential knocking on the door of a breakout, and that's a huge factor when it comes into inflation. So if we continue to see energy prices rise, that is not good for the inflation numbers going forward, and will obviously have big implications on what the Fed's next move is as far as rate cuts or lack thereof.
Yeah, absolutely, no doubt. We're going to go away and take a real quick commercial break. Oliver, stay with us. We'll be 103.42. I want to invite my guest back in, Oliver Slope. Oliver, you got about 10, 15 seconds here to wrap up something on it. Tell us something really interesting you see in that cattle market today.
Well, I tell you what, I know fundamentals are a huge player in the cattle complex, but it's hard to ignore the technical implications nowadays with computers. That April contract tagged the gap from last October almost to a T and reversed it. Now we're seeing some of the seasonal pressure start to snowball as some of these outside markets roll over as well.
Yeah, is there anything that we see out there just really specifically in that feeder cattle market that you like?
I'm not that optimistic on feeders. They had outperformed fats for much of the rally. I think that grains can still get some relief here, which could be a headwind for feeder cattle going forward. So I would expect a little bit more of a pullback. Not to say we're going to roll out of bed, but I think there will be lower prices here to come.
Absolutely. And I know we've seen a huge amount of transfer of risk here. It's going to be phenomenal. I hope a lot of producers have been able to take advantage of these really high prices that the futures markets have offered. Oliver, certainly do appreciate you taking the time to be with us this afternoon. Oliver Slope, he is with Blue Line Futures. And Suzanne, one more time to you, dear.